We're jumping straight into Datavault AI today. Everyone is watching the price action, but the real story is the pivot to Web 3.0 data monetization and the IBM partnership.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Subscribe and hit the like button.
The Learner. Today is about understanding a company that's, well, it's making a huge shift.
A huge shift is right. They're going from WISA Technologies to a player in AI and data science.
And our goal here is to figure out if this is a real turnaround or, just noise.
So much noise in the market right now.
It's deafening. But let's start with the bull case, because there is a compelling story here.
Let's do it. So at the core of this whole pivot is their patented platform, the Information Data Exchange, the IDE.
Right, the IDE.
Can you simplify that for us? What does it actually do?
Okay, so in simple terms, it's a platform that combines AI and machine learning automation with blockchain technology.
And what's the output? What's the product?
The product is what they call digital twins, and it allows for things like NIL. That's name, image, and likeness licensing.
Digital twins. I hear that term everywhere. Break that down for me.
So they're using a technology called acoustic sciences to credential real-world objects.
Acoustic sciences, so sound.
Exactly, sound. Think of it this way. They can create a unique audio fingerprint of a physical object, a luxury handbag, a rare pair of sneakers, you name it.
Oh.
By measuring its resonant frequency. A real one sounds different than a fake one. That acoustic signature gets encrypted on the blockchain.
So it's not just a serial number, it's tied to the actual physical properties of the item.
That's the moat. That's the high switching cost. It makes their data visualization and valuation really, really sticky.
Okay, that's clever. That's a very clever pivot from their audio roots. Now, let's talk partnerships. You can't build an ecosystem like this alone.
No way. And this is probably the biggest part of the bull case.
Yeah.
The IBM Watson X integration.
And I want to be clear here, this isn't just a press release saying they're a customer, right?
No, this seems much deeper. They're talking about zero-trust micro data centers and secure edge AI.
Which means?
It means they're building on IBM's backbone of security. For a big company to trust their data with Datavault, they need that IBM seal of approval. It's about credibility.
And then there's the other one, the fintech.tv integration.
Yeah, this is the one that really shows the tech in action.
The bias meter and ADI technology.
Right, so they're using their tech to measure bias in financial news broadcasts in real time, analyzing the speaker's tone, their word choice.
Putting a number on the spin.
You got it. For a trader, that kind of data is gold. It proves the tech has a practical, revenue-generating application right now.
And that's probably what's driving the momentum then.
I would bet on it. The price action, while the one-year trend is down, you have to look at the 30-day return.
It's up over 26%.
And we're seeing huge volume. That suggests, smart money is flowing in. They're betting on this recovery.
And it looks like it's finding a bottom, a basing pattern around that 86-cent psychological level.
It does. But, and this is a big but.
Let's look at the flip side.
We have to. Because as good as the story sounds, the numbers are, well, they're ugly.
Lay it on us. What's the financial reality check here?
The company is unprofitable.
Yeah.
Simple as that. It has a negative PE ratio of minus 0.64.
So they're burning cash.
Burning cash.
Yeah.
And for anyone who's held this for a while, the pain is real. The one-year total shareholder return is loss of nearly 49%.
Oof. So this recent pop is nice, but it's just a small recovery and a much bigger downtrend.
Precisely. And that brings up what I'd call the black box problem.
The lack of visibility.
Total lack of visibility. When you dig into the 10Q and 10K filings, you can't see specific revenue trends from these new initiatives.
So we don't actually know if the AI pivot is making any money yet.
We have no idea. And while the market cap is around $491 million, there is no quantified free cash flow.
It all comes down to execution risk then.
100%. Can they actually monetize the IDE platform? Rebranding from WISA to Datavault AI is a great story, but the revenue has to follow the story.
And if it doesn't?
They burn through their cash.
And what's the general sentiment out there? The news stories.
It's neutral, a sentiment score of 0. Even with all the hype, there was bearish news as recently as January 21st, highlighting fading momentum.
And let's not forget, this has been trading under $1.
Which puts it in the penny stock category.
And that means?
It means inherent volatility. Big swings on little or no news. It's a riskier neighborhood to be in.
Okay, so for anyone listening, trying to balance the bull and bear case, what should they be watching? What are the near-term triggers?
I've got two for the next 30 days. First, the fallout from the ICR conference.
They presented there in January.
They did. So now you watch for any product leaks, maybe some M&A rumors that come out of those meetings.
See if any big funds that were there start a position.
That's the tell.
Yeah.
And second, the fintech.tv rollout.
Mm-hmm.
We need to see that bias meter go live.
We need proof of concept.
And proof of revenue. We need to see updates in February or March that it's actually generating cash.
And what about the bigger picture, the macro context?
You have to watch the sector rotation. Is money flowing into Web 3.0 data plays? If that whole sector gets a bid, Datavault will rise with the tide.
But the real test is the earnings report.
Always. Q1 2026 earnings, that's when we need to see if the IBM and fintech.tv partnership revenues actually show up on the balance sheet.
That's the moment of truth.
It really is.
All right, let's try to wrap this up. The final lowdown, what's the elevator pitch here?
The elevator pitch is, Datavault AI is a high-risk, high-reward play on Web 3.0 data monetization.
Simple as that.
The thesis is strong IP. Those patents are real and strong friends, like IBM, versus a history of price weakness and significant cash burn.
So the final thought for you, the listener, is this. Is this a multi-bagger recovery waiting to happen or just another volatility trap?
The volume says people are betting on the former.
But the financials say proceed with caution.
Do your own research on this one. It's critical.
Absolutely. Dig into those 10 Qs, and as always, keep it simple. Thanks for tuning in to the Easy Money Show.
We'll see you next time.